Good afternoon from Dubai, good morning or good evening wherever you're joining us from in the world, and welcome to Energy and Utilities Global Digital Week. It's a new platform to bring together energy professionals from across the world in an interactive and safe environment to discuss the opportunities and challenges facing all of us in the industry during COVID-19 and beyond. So 2020 has been a challenging year for us all. Firstly, I hope that you and your family are safe and well. And our thoughts are with our friends and colleagues in Beirut after the recent tragedy there. So staying connected is now more important than ever. And this week will provide an opportunity for you to not only keep informed, but interact with your colleagues and peers across the world. We have 14 webinars and training seminars this week with a variety of experts from the public and private sector participating. And it's not just a programme of webinars this week, we also have an interactive networking tool, GRIP. So for those of you who haven't heard of GRIP, it was the first artificial intelligence networking tool, and we have it running online this week. So on the Global Energy Week microsite, you can sign up for this on the right-hand side. Just use the same email you used to register for the webinars, and you can connect directly with thousands of professionals attending. So that's something to look out for. The key theme of the week is powering the world into the new energy era, focusing on the opportunities and challenges of successfully implementing clean energy programmes and improving efficiency of existing conventional power resources in the post-COVID-19 world. Renewable energy accounted for almost 3/4, 72% of the total new installed capacity in 2019, according to IRENA. According to IRENA, the total capacity of renewable energy increased by 7.6% last year, with 176 gigawatts of new clean energy capacity installed during the year. The new installed renewable energy capacity brought the total percentage of clean energy capacity across the world to 34.7%, up from 33.3% at the end of 2018. So when analysing the proportion of renewable energy, there's obviously differences between regions. So renewables accounted for at least 70% of the new capacity additions in all regions, apart from Africa and the Middle East, where renewable energy accounted for 52% and 26%, respectively, of all the new installed capacity. However, while the Middle East had a smaller portion of renewable energy installed, the 2.5 gigawatts of clean energy installed last year represented a 12.5% growth in 2018. So that just sort of shows that even in regions where renewables, it's not making as much of a total proportion of the mix, we're still seeing quite a lot of investment and some large projects. This year, we're facing a number of economic challenges, with global economic growth likely to fall further than it did in 2008 and 2009 during the financial crisis. IMF predicts the global economy will contract by at least 3%, probably a bit more. However, while the impact of COVID-19 outbreak has created a number of short-term challenges, it's also providing an opportunity for the public and private sector to prioritise sustainable policies and green initiatives to assist in the recovery. In fact, IRENA estimates that renewable energy could spur global GDP by 98 trillion by 2050. And that would help to decarbonise away from fossil fuels, adding an additional 2.4% to global GDP between now and 2050. So that just gives you a little bit of an idea of the scale of what's possible with a move towards sustainable energy. So I'd like to remind you today, we're trying to keep this as interactive as possible. On your console, you will see a Q&A box. So please submit questions anytime from now until the end of the broadcast. We will put these to the experts. Anything that's not answered, I will send these to the participants, and we will endeavour to get the responses to you as soon as possible. So the panel today is risks, returns and investments in the energy sector. And I'm delighted to welcome a global panel for you for a global forum. We have Hanan Bakr, who's the Director and Sector Head of Energy for HSBC in the MENAT region. Amit Jain, a Senior Energy Specialist from the World Bank. Anand Rohatgi, the Chief Operating Officer from Synergy Consulting. And Jörg Gabler, Principal Advisor for GIZ, which is the German Agency for International Cooperation. So welcome to you all. Thank you for joining us today. And Hanan, I think we'll start with you. So working for HSBC, global bank, it'd be great to get your view on what are you seeing from clients in terms of their sustainable finance requirements and the transition towards lower carbon emissions. And what has changed throughout COVID-19? Are you still seeing a commitment towards more sustainable energy policies and sustainable paths towards reducing emissions?
Thank you, Andrew, and hi, everyone. Well, good questions. Actually, throughout this pandemic, we had to reassess in HSBC our strategies and identify sectors of high and low transition, which is predicting how the future will look like and how we can continue to support our clients successfully amid those changes. So while sustainability and digitalization played a key role in HSBC current strategies, throughout this pandemic, we believe that those two areas shall even play bigger roles in the future. As for our sustainability commitments in HSBC, we made a commitment of $100 billion by 2025, supporting our clients with their sustainable finance requirements. We have already deployed more than 50% to date of these commitments, and we have won the Euromoney Awards in 2020 as the Middle East Best Bank in Sustainable Finance, as we are not only supporting clients in all segments, but as well with a full suite of products across most number of countries. 2019 was a successful year for green bonds and sukuk issuances. Again, HSBC played a very active role in all of these issuances in the MENA market. We have also actively supported regulators, policymakers to develop the agenda across the Middle East. And we continue to do that and to develop our transition risk methodology to understand the climate risks faced by our clients and how we can support them in their transition journey. I must say as well that during the pandemic, if you're looking at from an environmental perspective and how the lockdowns and how these global lockdowns have affected everyone and have affected the mix as well. So we have to take into consideration that the global economic slowdown impacted most of the industries, and renewables are not isolated from this impact as well during the past six months. So from an environmental perspective, and despite of the lower carbon dioxide emissions at the time of the lockdown, the single plastic usage has surged. I have just read a journal Science estimating that the plastic waste flowing into oceans is likely to triple in the next 20 years. So and even the number was focused on the U.S. With an increase of around 300%. And the reason why as well that during this pandemic there was less traffic and less carbon dioxide emission. However, on the other side, the waste of plastic coming from the packaging and the personal protective equipment has surged as well. Interestingly, on the solar activities, there was a report issued last week by Mercom Capital stating that solar activities are far from being back where it should be, and that the global corporate funding in the first half of 2020 was 25% less than last year, which totals around $4.5 billion. However, the good news over here as well is that the oil and gas companies were the major acquirers of the solar assets in H1 2020, and this accounted for around 6.5 gigawatt of acquisition, followed by investment firms. Why these are good news? Because we all know that most of the emissions of the carbon dioxide emissions as of today coming from the fossil fuel industries. And this is good news as well for renewable assets, where they will be valued highly as attractive assets for oil and gas companies, which are looking for quick diversification to their business and meet emission targets in the near future. Looking at the MENA region, with the hydrocarbon-dependent economies supplying 20% of the global oil and responsible of 10% of the global emissions. The good news about the power plants in this region is that 62% of the electricity generated in the region is based on natural gas powers, where 21% on oil and less than 5% on coal, which reflects the local abundance of resources. Having said that, renewables build-out is underway. Incremental growth in domestic electricity demand is increasingly being met by using natural gas rather than crude oil. And most of the countries in the region have committed to Paris Agreement with various targets. So the progress is evident through major power projects, sustainable cities under construction, and sharp falls in renewable tariffs. And many of these GCC countries are even now actively moving to shift their domestic electricity generation with natural gas, which is increasingly complemented by renewable energy. And it has a commercial aspect as well in order to free up the crude oil for export. And this approach has been coupled with domestic policy reform on energy consumption-based subsidies since 2014. So I hope that I answered all your questions, Andrew, with my response.
No, great. Thank you, Hanan. That was a great overview into what's happening in the region. I mean, that's a good point that was discussed yesterday on some of the webinars. In the Middle East region, it's not just about diversifying your energy resources for power production. It's about diversifying economies and creating jobs. And obviously the economies in the GCC in particular, very based on hydrocarbons. So it's not just a case of them implementing renewable projects or working out how they can fit gas, conventional power in with renewables and storage and these sorts of issues. It's sort of the lifeblood of their economy. So how they can diversify their economies and make sure that they can increase the efficiency of the production as well. So thanks for that, Hanan, but we'll come back to you later, but that was a great introduction. So Amit, I'd like to turn to you next from the World Bank. We heard from Hanan there that emissions have fallen particularly during the lockdown. And I know in India that was particularly the case, which has a problem with pollutions and carbon dioxide. But India also has a lot of renewables capacity coming online, and one of the most ambitious programs in the world, probably only second to China. So is COVID-19, is that going to help or hinder the development of renewables in India?
Thanks, Andrew. You must have heard that great innovation comes in the time of crisis. So I believe not only India, but several other countries are using this time of crisis to bring out significant energy sector reforms. India brought about draft electricity amendment last month. We know there's a stimulus program from Germany. Korea has come up with green bonds. The point I'm saying is significant efforts have been made by several countries to push difficult reforms in this time of crisis. Now, power sector is facing some challenges because of COVID, which are not only restricted to renewable energy, but as an overall power sector problem. We know that utilities are in financial problems because not only their collection efficiency has gone down during the COVID times, but also because the consumption of electricity has gone down in the last 6 or 7 months. Because we know that on ground, there is not much activity happening in the commercial and industrial sector. What is important for, I think, the clean energy enthusiasts like us is to align our priorities in solar and wind in the direction of what government is thinking. Now, you and me are a big fan of solar, but for the government right now, Andrew, the main problem is jobs and to kickstart the economy. So we have to see how this clean energy reforms fit in the overall strategy of several governments. And as you rightly mentioned, India has taken a bold step in that direction. In the last 6 months alone, Andrew, India has signed contracts of 20 gigawatts, which is huge, in some of the innovations like round the clock, which includes solar, wind, and storage. Looking at a green shoe option with manufacturing, India is looking at large-scale manufacturing because it immediately creates jobs. So these are the reforms which India and some other countries are taking to use these difficult times to come up with sustainable energy reforms. Another example I can give you is of a very small country like Maldives, which is now totally dependent on tourism and from the forex reserves, but are now struggling because tourism is virtually out in Maldives. So they are also looking at how to reduce their oil subsidies, which are almost at 8% of the GDP, to replace them with significant renewable energy like solar, so that their dependence on oil and tourism goes down. In fact, they are planning to sign a 5 megawatt solar PPA, which is small for a country, but big for a remote island like Maldives, on some of the World Bank guarantees framework to showcase that they are moving forward even in these difficult times. So I think it is time to bring out some innovative financial structures to kickstart some of the projects which were stuck because of these COVID times, and governments are willing to hear and make the reform. Thanks, Andrew.
Sure, great, thanks, Amit. And that is the crucial point, isn't it? That during the COVID-19 pandemic, it's going to be a challenge. Some see it as an opportunity, particularly when stimulus packages are being devised by governments. There is a view that from those proponents of clean energy that it should form a key part of any recovery plans. And it's not just about diversifying energy and reducing emissions. It's about the opportunity for new industries, and particularly in India, the opportunity for the manufacturing sector as well. So thank you for that, Amit. Anand, Synergy Consulting involved in the region in the Middle East on a number of projects in the energy sector with clients and developer consortiums. In fact, Synergy has advised the recent consortium that has won the Abu Dhabi contract for 2 gigawatt solar project, the largest PV project in the world. So it'd be great to get your view on the market this year in the region. What's happening? Are investments in renewables still going ahead? And what do you expect to see for the remainder of the year and into next year?
Hi, Andrew. Andrew, thanks so much for having me here. To answer your question, we need to look at how a project progresses. When we see a project on paper, i.e., the state utilities launching some form of an EOI or a request for qualification, we feel that the project is on the ground. But in reality, there's at least 6 to 12 months of internal deliberation, planning, etc., before the project becomes public. Now, this year obviously would be a fairly active year because before we got into the COVID situation, there were a lot of projects which had gone through the initial planning process. So those projects would have either hit the market or continue hitting the market. However, what we've seen is, the period starting from mid of March till about July, there was a significant slowdown in planning for new projects. This will have a counter effect on the markets. We will not see the slowdown now, but come end of the year and potentially H1 next year, our guess is we will see a slowdown in new projects, which also means a slowdown in new renewable projects. The second aspect is also, renewables means different for economies. For developed economies, it means something different, and for developing economies, it means different. And the underlying principle is the lack of its ability to become reliable baseload yet at affordable prices. So for developed economies, it was how do we replace fuel consumption, which means renewables would move forward as long as the tariff would be lower than the fuel cost. But for developing economies, there's already a power demand supply mismatch. and adding renewables would actually result in a greater mismatch between availability of full reliable power. So our guess is that the COVID will result in an even bigger impact on developing economies where renewables will take a bigger hit in the overall planning process. And we would guess that these countries will start looking at more baseload plants, i.e. move towards conventional in a bigger way in the next 2 to 3 years. So that's how we see the market evolving. Andrew.
Sure, and thank you, Anand. And we are seeing a move, aren't we, from some of the traditional oil companies in the region towards implementing renewable energy projects for power supplies as well, such as ADNOC and others are looking at using solar and wind to do that. Is that something you expect to see more of in the future? And I guess they'll be using maybe similar financing structures that we've seen for utilities projects. For example, I know ADNOC is looking at PPP transmission project. Do you expect to see more of that in the future as well as the oil companies seek to improve efficiency and reduce emissions?
I think yes. See, the driver for that will not be predominantly renewables or clean energy. My guess is that that would be more from an economic approach. If you see what the ADNOC is trying to do, the approach they have taken in terms of the subsea cable PPP, it is a move to make power supply to the oil rigs more reliable and at a cost which is lower than the cost of burning diesel. So given where the oil prices are today, our expectations that oil companies will move towards improving the overall economic efficiency of their operations. And some portion of that will have cleaner energy or more efficient operations built in. But what I'm saying is it's not solely driven by clean operations. It's more driven by the economic approach of reducing operating costs for producing oil.
Sure. Okay, great. Thanks, Anand. We'll come back to you in a bit. And Jörg, it'd be great to get your view. So, working for a development organisation, it's part of the German government. Obviously, Germany has, quite a rich renewables history. It's been one of the leading countries in terms of developing a clean energy sector and moving away from fossil fuels. And it's going to move away from renewables, from nuclear as well. It'd be great to get your view on what GIZ is doing in terms of supporting the development of clean energy projects and your view on the market and the COVID-19 situation. Will it help or hinder sustainable energy programs?
So thank you, Andrew, and thank you for the opportunity to speak a little bit, maybe on both sides, the Indian side and the German side. And greetings to the audience and my colleagues. So I'm locked down in Germany since February, so I have not been able to return to India. My post, basically, we support there the Indian government, especially the ministries of power and renewable energy, on their energy transition, mostly on trying to strengthen the discoms as the key players in the energy transformation process, as well as increasing measured in gigawatts or megawatts, the shares by the different states where we're active in terms of how much solar power is being added. These are our two main mandates, basically, besides some additional programs. If I look at the situation before and after COVID, I can say that one aspect unites Germany and India, and that is the full commitment in and towards the renewable growth in both countries, especially on solar. So Germany has introduced several stimulus packages, including a hydrogen package of 9 billion euros. And on the stimulus package, which involves a little bit the renewable side, the solar cap has been removed, and there's a huge push towards e-mobility. And I can also say that on the German side, the slowdown in solar capacity additions has not been seen at all. The trend towards solar has even increased, 60-70% increase in demand during the COVID months. Let's see, from March to June, July, on track and on record. Going back to India. India's commitment towards the sustainable growth, especially towards completing or fulfilling its renewable energy, solar goals and targets, has been reinforced by Prime Minister several times with some excellent ideas. Amit mentioned already from the World Bank that the Electricity Act is being reformed. Several green recovery initiatives are being discussed and implemented, which I see again as a strong signal for positive investments. But as a big surprise in this time of substantial COVID crisis, or let's call it uncertainty, a disruption. I would not even use. I would use the word interruption. India is saying, let's focus on self-reliance. So, Andrew, if you ask me what I see as a big difference before and after, I see right now tremendous energy going into discussions of trying to increase investments into the manufacturing sector of India. Solar cells, solar modules, including even the process of polysilicon to get at least 10, 15, 20 gigawatts. Yes, these are the numbers I hear of manufacturing capacity into the country. And the investment into manufacturing, let's see, if you want to invest into a gigawatt of cells and modules, you need 10 million euros. If you want to invest into a solar power plant that size, you need 10 times or sometimes even 20 times as much. So the investment into production facilities, equipment, and locations is something I see, and we currently support in a reinforced manner. So back to you, Andrew.
Great, thank you, George. It's a great introduction there into what's happening in India in regards to manufacturing. We'll come back to that point a little bit later. So Hanan, you gave a great introduction earlier on what you've seen in the region in terms of the appetite from investors for green energy project. I remember sort of 6-7 years ago in the region when there was the first few renewable energy projects planned. And there was a bit of hesitation on whether they're going to take off, whether investors would be comfortable. And, the situation has changed a lot there. So what are you seeing in terms of appetite for investing in green projects?
Well, actually, we have seen a lot of traction during past year across sovereign and non-sovereign, where we have seen a type of clients like Majd Al Futtaim issuing the first green non-sovereign sukuk in the region, which was quite interesting as well. And they have done another issuance later in the year. We're seeing a lot of attempts from the government, from banks, from even private equity firms. We have seen, for example, Egypt coming with their attempts for the first green issuance as well, and we're supporting them on this front. So I cannot really specify a certain country out of the others. I believe there is a lot of interesting collaboration nowadays from the sovereign and non-sovereign in the region. However, as well, we have to agree, Andrew, that there is a recipe for encouraging renewable investments in the Middle East, because as of today, there is a gap between the Middle East and Europe, and we're hoping to bridge that gap, having all of the resources that we have in the Middle East in terms of solar, wind. So there are really a lot of factors or success factors over here from a nature perspective. And we believe that this should be complemented as well with some roles played from the government, from the regulators, and us as the financial institutions. So when we look at the governments and the regulators, and if you allow me, I'll be more detailed and comprehensive over here, because we have done a survey in 2019, and we have came to point out over here the challenges that falls on the shoulders of the government, regulators, and the financial institutions in order to encourage for green investments in the MENA region. So from the government side, there should be a commitment to more stable and predictable investment incentives for low carbon solutions, meaning energy prices, which might require as well the removal of energy subsidies from the fossil fuel industries. And we have seen some countries on this pathway, the risk-sharing models and the loan guarantees, and the early write-offs of the fossil fuel long-lived assets. So as you have as well attributed at the beginning, that there might be some socio-economic factors as well that has to be taken over here while having or operating in a hydrocarbon-intensive economies. As well, the early write-off of the fossil fuel long-lived assets, where the government and the regulators can assist by scheduling the decommissioning of such assets or the retrofit of these assets, so the transition process becomes smoother. And when it comes to financial institutions, we believe that the financial sector should be taking a balanced perspective of the physical risk, the transition risk, and the opportunities, which should be playing a key role in managing this process in an orderly fashion. Because again, we have responsibility towards sovereign and non-sovereign, and if you're operating in a highly intensive hydrocarbon region, then you have to be really taking a balanced view. The transition will not happen between a day and night. It should take some time not to have a negative impact on the economies and the population, whereby the main objective of the green transition is positive for the environment and so forth for the population. Financial institutions as well should act as an advisor on the guidelines and the cross-cutting factors affecting these investments. And in addition to that, promoting as well the corporate PPA structures. And finally, creating financial products whereby we could be encouraging and supporting the low carbon investments. And this could be achieved through linking due diligence and financing appetite to benchmarks which are allowed, which are aligned with well below 2 Celsius pathways.
Sure. Thanks for that, Hanan. And that's the point you've touched on there is, for the Middle East, very relevant, that it's in terms of reducing carbon emissions and improving efficiency, it's not just about developing renewable clean energy projects. It's your existing infrastructure and assets that will still play a key role for many decades to come. It's about retrofitting these assets. And in the region, the oil companies and the government's obviously the strong sovereign position. So there will be a lot of interest for those moving forward. And it'll be interesting to see how that develops in terms of the push to diversify the economies, to maximise the benefits of their hydrocarbons on the export market, and also reduce operating costs and reduce carbon emissions. So many thanks for that. Amit, it would be great to get your view now. We've heard a bit about from Jörg about, and yourself earlier, about the manufacturing opportunities in India. It'd be great to get a bit more detail from you on terms of what is the government doing in India to sort of incentivize a green energy manufacturing market there and industry, or what role does the government have to play? I mean, does the private sector will the private sector lead on that as the cost of renewables come down and the attraction of developing renewables increases, or does the government have to play a key role in stimulating and incentivizing manufacturing industries in sustainable energy?
Thanks, Andrew. And see, when it comes to manufacturing or renewable energy deployment, investors are looking for one thing only, Andrew, which is assured returns, right? If I put $1 on the ground, I'm looking for 10, 15, 20% return in due course of time. So that's the basic philosophy of any project, be it manufacturing or RE deployment. Now, what has happened in the last 4 or 5 months in India or in the Asian country is that the investor is getting more and more tricky because they are now looking at risk in a different manner. They are looking at a risk on a political perspective. They are looking at risk from a return perspective, if the PPAs will be honored or not. They are also looking at risk from a policy perspective. Now, you can kickstart manufacturing, which is the right thing to do, but they're also looking, will the vision from the Indian government, or for that matter, any government, will hold true 10 to 20 years down the line? Do we have the pipeline in terms of gigawatts of projects coming in the next few years to support the manufacturing line, which Government of India is promising? And it's a very good start. What Government of India is saying, for example, in the current green shoe option, is that if you set up an 8 gigawatt facility on a deployment basis, you also assure us that 2 gigawatt of it's coming from the manufacturing. So they are linking, look at this policy innovation, they are linking the deployment with manufacturing on the ground to kickstart the economy. So this is what I think the Indian government is doing right, is manufacturing, creating jobs, kickstarting the economy, but also fueling this clean energy revolution, what India is going to do in the next few years. One last thing, Andrew. As I mentioned, there are a few risks which are resulting because of the COVID times. One is the PPA risk, and also renegotiation of PPAs by some certain state governments and also by certain countries. So there's an innovative financial structure which World Bank is working with IRENA, International Solar Alliance, and AFD, the French Development Bank, which is called SRMI, Sustainable Risk Mitigation Initiative. It is a 3-tier framework. It comprises of World Bank guarantees to protect any termination of contract, which Hanan also was mentioning. Second, it looks at an escrow account, which is a funded facility of a 6-month delays. If there's a delay by utility, this fund will come into picture. And third is a letter of credit by a commercial bank to be the first course of action in case there's a delay. This was successfully tested in the 750 megawatt solar park project in Rewa, which was released by the Prime Minister last month, and also in the 5 megawatt bid in Maldives. So large country or small country, this financial innovative structure should be put in place to take care of the concern of the investors if we want to bring them back into this clean energy revolution. Thanks, Andrew.
Sure. Thank you, Amit. And if you can stay on the line for a second there, we've got a question for you, so please keep the questions coming in. We have a question for you, Amit. What is your view regarding renewable energy growth in Bangladesh?
Very interesting question, because I also happen to be working in Bangladesh. Bangladesh, Andrew, is a very curious case. So let me divide this question into 2 parts. First is the renewable energy in terms of energy access. So mini grids, solar home system, clean cooking. Bangladesh is a world leader when it comes to energy access in renewable energy, because the network of microfinance institution in Bangladesh coupled with high density of population in Bangladesh makes this a success story. We are working with IDCOL, and then you have Grameen Shakti on the ground, Rahima Fruz. These are the on-ground microfinance institution which has successfully carried out solar home system, clean cooking, and mini-grid and solar pumps on a very wide scale. So we have success stories from them which other countries could replicate. Now, however, when it comes to solar rooftop and when it comes to solar parks, we are facing challenges in Bangladesh because, talk about solar parks, there is hardly any land in Bangladesh which can replicate solar parks which we are doing in Brazil, in India, or in China. So that's a fair problem. Similarly, because of this high population density, there is very limited useful space for solar rooftop in Bangladesh. The business case is there, but there are significant challenges on net metering and also on looking at some of the policy and regulatory changes in Bangladesh. We are looking at innovations like floating solar in Bangladesh because, as you know, there are a lot of rivers and wetlands in Bangladesh which could be productively used for innovations like floating solar. But there's still some time before we can implement these on the ground.
Thank you for that, Amit. I must admit, I didn't know much. I knew that Bangladesh had some solar projects, some large projects going on, but that's great to find out that it's an innovator. A quick question. Please repeat of the scheme that we're working with IRENA for the innovative structure.
Andrew, can you please repeat the question?
Yeah, somebody's just asked, could you repeat the name of the scheme that the World Bank is working on with IRENA? You mentioned that you're working with IRENA for an innovative structure. Somebody's just asking what the name of the scheme was again.
It's called Sustainable Risk Mitigation Initiative, SRMI. It was earlier known as CRMM, on which IRENA and Terawatt Initiative was working. Now we are partnered with IRENA, ISA, and AFD to launch this scheme. It is a combination of, or it's a cocktail of guarantee structures with escrow account to give comfort to investors where assured return can be assured to an investor in terms of preparing a bankable project.
Okay, very interesting. Great, thank you for clarifying that. Amit, please keep the questions coming in. Anand, in the Middle East, obviously you've worked on a number of projects with clients and developers, large-scale utility solar projects, some of the largest in the world. However, in terms of meeting the ambitious energy targets, and in the Middle East, some of the most ambitious targets have been set globally by 2050. It's not just going to be about large utility scale projects, it's going to be about smaller projects, solar as well. What are your clients in those? And if not, what do they need to do to sort of kickstart those programs going in terms of regulation? Is it having wheel-in agreements with the grid for private solar, or is it allowing creating suitable feed-in tariff programs for rooftops? What do you think in terms of increasing the renewable energy capacity for smaller projects?
So I think that's a very interesting sector right now in Middle East. Before we get there, we need to look at Middle East in two parts. One is the GCC countries, which are economically developed. The demand-supply mismatch does not exist. There's a fairly large fleet of conventional power plants. And then you also have the emerging economies, where there's an existing huge demand-supply mismatch. And a lot of the unmet demand is currently met through either power failures or through diesel generators. So in almost every country, we can see that there is a very strong push towards using distributed renewable energy generation, which includes rooftop solar, car parks solar, even small wind opportunities, etc. There are also significant amount of traction on the net metering structure. And now we're also seeing quite a bit of movement around the wheeling structure, which would mean you could actually set up a power plant, a renewable power plant far away from the consumption site and just use the grid for wheeling the power to the consumption site. But some countries have progressed very, very well on that. UAE is a case in point, especially Dubai, a very, very efficient, a very forward-looking policy, a lot of clarity around wheeling, around net metering, etc. Some countries are pushing forward their programs very hard. Saudi, case in point, they have a lot of energy going into the whole net metering and wheeling structure. So there's a lot of focus there right now, especially with the giga projects coming up, where the giga projects in Saudi have to be environmentally sustainable. Hence, they need to be predominantly driven by renewable energy. There is a push towards access to grid, ability to generate power at site, plus using grid as a backup in case of failures, etc. So there is a lot of push there. Similarly, in the developing economies, there is, again, quite a push there, but the push there is not from the push there is more from getting access of electricity. So in those countries, it's less about wheeling, but it's more about allowing distributed generation to happen. So you're seeing a lot of traction around microgrids, around small and medium-sized hybrid solutions, picking up steam, and the regulators are stepping up big time in allowing such programs to succeed. Yes, there are some teething problems, especially situations like microgrids, where end consumers are either individuals or a set of individuals, which makes either the cost of electricity a bit higher or the whole structure not investmentable. But as I said, there is a lot of traction trying to make that work.
Great, thanks. And Jurg, great to get your view on what's happening in India. I mean, I believe there is a focus there on rooftop solar in India. Is what the regulatory market in India, in terms of implementing rooftop solar or microgrids, what needs to be done to sort of improve that, or have they got a good structure in place already?
Yeah, thanks, Andrew. So you probably have understood that Rooftop is our GIZ's focal point in India, but I also would like to address the overall potential in terms of, let's see, securing assets from a manufacturing perspective. So I address your question twofold, if you don't mind.
Sure.
My view is the following, and I will share some numbers on an interesting country. So India's government, through MNRE and its schemes, several schemes, Kusum, Shrishti, a couple more in total, they are securing domestic manufacturing of 30 gigawatts, of which the rooftop sector is roughly 4 gigawatts of installed capacity coming from domestic supplies, so cells and modules, and 20 Kusum. That means the entire solar irrigation sector, which is just starting up. It was very strong in the past, let's say 20 years ago, and now it's being revamped, but we are talking here all grid connected solar. Under two different schemes, but excellent subsidies from ranging from 20 to 40% into the capital investment. And then 12 gigawatt of various initiatives. So in total, 36 gigawatts are being, let's see, subsidized with, and the request is domestic content. That means you have to have a somewhat strong local manufacturing base, which you don't. India currently shows maybe 6 to 8 gigawatt in cell manufacturing, maybe close to 10 gigawatt in module manufacturing. There is a shortage. If you take the overall new target of, I would use now today, 450 gigawatt by 2030. Earlier 2020, we had 100 gigawatt of solar. So if you take the new target, we have a shortage of domestic supplied components of roughly 35 to 40 gigawatt, which is immense and which is a great opportunity for investors to come in and set up manufacturing. And India also is trying to secure that the prices will remain stable. Just recently introduced the safeguard duties starting, I think, in August for 1 year at least. 14, close to 15% is on top of any imports into the country. So that is a very safe haven for investments, from my understanding. The biggest question here is, and I can speak on it, is what technology is India going to choose for new equipment, for new assets to install on the ground to go forward with? And that is the toughest question to me, and not how many gigawatt should a investor bring up in terms of local manufacturing capacity. To address your second question, rooftop solar is seeing a big push because the market potential is widely untapped. Motivation behind this push comes from different sources. Number one, the motivation here is given clearly again by the central government with a subsidy program. I earlier mentioned it. It's called Shrishti. It just allows 20 up to 40% of the capital, so the investment into a solar system, coming from the central government. And then several states are taking also initiatives together with the discoms, with the utilities, to generate very high demand. The biggest, the best example currently, I will not say that in a few years that will change, but currently is Gujarat. Gujarat is targeting 3 gigawatt by 2022 and is on its way with a great state policy and state initiatives to aggregate the capacity. So I can speak on Gujarat and their toolbox a little bit further if you want me to, but I'm going to give it back to you now, Andrew. Thank you.
Great, thank you for that, George. I think, yeah, just it's the scale of what's required in India, isn't it? I mean, you're talking 35 to 40 gigawatts there. Amit was talking earlier about contracts being signed for 20 gigawatts of solar already this year. It's a lot of opportunity there. We have a question for anybody who feels like they want to take it. How does the slowdown of PV panel manufacturing or the importing of PV panels, how will that affect the energy sector with a high proportion of PV power plants in 2020? So I guess that people are talking about China to start with, where I think they've got the 3 largest manufacturers in the world. Obviously, the logistical challenges are being faced across the world for PV manufacturers. Has that had any impact on the projects planned in India, or Anand, have you heard anything about that affecting development of projects in the Middle East? Who wants to take this one?
So let me take a shot at this. I don't think it has affected Sorry, go ahead. Sorry, go ahead, Amit.
Sorry about that. It's a difficult question, Andrew. I'll tell you why. Because in the short term and medium term, first of all, China has more or less kick-started its manufacturing on a full scale. So there is no dearth of manufacturing in China. So we can very soon expect a glut in the market on the module side. So So you will see further solar prices going down in the next few months. The problem is now with discussion of safeguard duty and the basic custom duty being discussed in India of the tune of 25 to 40%. And you have also seen the backlash from US on Chinese products. So it's not about if it is a logistic problem, it's about if the countries like India and US start putting duties on the Chinese modules, which will then create if we can import and to what extent we can import Chinese module. In the overall module market, you will see a huge glut. And if we don't have these duties, you will see solar prices falling down and PPA prices further falling down in India and these markets. But I'm nervous about these duties coming in India and other countries, which could complicate the matters to answer this question.
Sure, yeah, that's a good point. I mean, all of the talk this year is about the impact of COVID-19, but we've got trade wars going on. At the start of the year, it was the US-China trade war, which is still going on. There was Brexit in Europe as well. So it's a difficult year. Please go ahead, Anand.
I think just to add to what Amit just said, not getting into the politics of it, I don't think there'll be a fall in PV power plants just because there is customs duty or additional levy by countries on importation of panels. What it'll do is simply make either the panels slightly more expensive or it'll slow down the fall in tariffs for those particular countries. The demand will continue to be driven by the state utilities, predominantly the state utilities continue to procure renewable energy. And as long as that happens, my guess is the demand should remain as it is.
Sure. Okay, thank you, Anand. I'm interested to find out a bit more about the next stage. So now the price of solar and wind energy has come down to below that of fossil fuels. So it's not just a case of countries and companies wanting to reduce emissions now. It's cheaper. But for the next stage, talking about energy storage, which there's a lot of discussion now. There's battery storage, and there's talk about green hydrogen now. A lot of talk, but that's still going to be a few years off, and it's still very expensive. Interesting to get your views on that in terms of appetite for investing in energy storage, because it's still quite expensive. Governments and private investors are keen to support utility projects with PPAs for solar and wind. But what about energy storage projects with batteries and green hydrogen? This one's for anyone who wants to take it.
I would take it, Andrew, if you don't mind.
Sure.
Thank you. So I can also, again, speak of both countries. In Germany, the trend is towards self-producing electricity independence. 180,000 electric batteries have been installed. Trend is going up. Every PV system is combined with storage. It has to do with the market conditions, electricity prices rising. We are now reaching 30-35 euro cents per kilowatt hour here in Germany, and the feed-in tariff scheme under the renewable energy bill is very low, below below 10 euro cents feed-in tariff. So the conditions are for self-consumption. Therefore, the market is developing in this direction. We are pushing in India with a large program, which is now even directly taken up by the Prime Minister's office and the ISA PV port and store. It is a solar system which addresses India needs. These are replacing generators with solar and with storage. India's households still add 8 to 9 million batteries per year because of the downtimes in the grid. The grid is still not stable, and in many states you have several hours per day no electricity available, so that makes the need for battery backup, also called UPS systems. Our PV port and store scheme, the way we call it now, is reaching a magnitude we never would have expected, where we see also tackling larger systems now, which replace diesel generator backups. You have on buildings usually at least one diesel generator, sometimes even two, to back up the first diesel. So diesel becomes expensive and critical, and with the drastically falling prices for lithium, LFP, so the safer side of the lithium batteries, it becomes more and more attractive in India to go for a combination solar and storage to shift your electricity consumption when you actually need it with the battery. Yet, for a big mass breakthrough, it will take another 5 to 10 years. Thank you.
Thank you, Jörg. Anand, I know previously we've discussed energy storage projects in the Middle East. There's been talk about some projects and some that were sort of planned and haven't happened yet. How do you expect this market to pan out in the coming years? Are you still seeing appetite from clients to push ahead with energy storage projects?
I think the answer is yes. We are seeing quite a bit of appetite from clients. As I said, these energy storage projects have to be driven by the state-owned utilities rather than by individual developers. There is no dearth of developers or capital for these projects. Where there is a shortfall is utilities planning and then tendering out such projects. And we would expect that developing economies of Middle East would run faster on battery storage projects because the retail tariffs are high or grossly subsidized, and B, they have a demand-supply mismatch. So they do see storage options as a more viable option than standalone solar with mutant in nature. So to answer your question in a nutshell, yes, they will move forward, but my guess is emerging markets will run faster on this aspect than developed markets.
Thank you, Anand. Amit, have you got anything to add to that about in India? Are you seeing any appetite for storage projects or the next phase of renewable development to allow 24-hour power?
Yes, thanks, Andrew. In fact, government is thinking of a national storage mission. So government is very serious on a battery and energy storage program. When I mentioned about round the clock, this was probably one of the largest bid we had in India, where the bidder was asked to deliver 80% of the capacity factor over a period of 1 year, which can only be done with large-scale storage. And then there is a plan on electric vehicles. So as we know, storage is the future for any country and for India. But Andrew, the difference between India and several other countries on storage is like Germany or California is in India, forward procurement is a loss-making proposition. What does it mean? Because of the cross-subsidy in India, the tariffs for industrial and commercial is higher, and lower for residential and agriculture sector, which is opposite of Europe. Because of this, and also because of the inefficiencies in utilities, most of the discoms are making loss. So they tend to shed power in the rural sector and then provide expensive power in the urban sector. So for them, more power procurement does not necessarily lead to more profit because of this complex situation where we have in India. Further, Andrew, the storage is not monetized in India. For example, if there's a frequency drop, if there's a blackout, if there's a brownout in India, utilities are not penalized for this. So storage is going to become popular in India, but as of now, we don't have the right policy framework in India which can monetize storage. One example, in California, we saw tens of gigawatts of storage projects being tendered out on a PPA mode. We have not moved in this direction as of now. So we need to bring this monetization of storage in terms of how the benefits of storage in terms of spinning reserves, in terms of RE integration, and in terms of preventing these blackouts and brownouts. So what I'm saying, a lot of groundwork and homework need to be done in India before we kick off to this revolution.
Sure, thank you, Amit. And yes, now getting towards the end of the broadcast, I'd be interested to hear your views. Obviously, COVID-19 is sort of affecting everything just now. But when we get past COVID-19, whenever that is, what do you think will be the hurdle to developing renewable energy and hitting renewable energy targets? Will it be the technology? Will it be liquidity post-pandemic for financing schemes, or will it be regulation? What I'd like to get your view on that. What do you think will be the main challenge? Hanan, do you want to take that first?
Well, actually, yeah, sure, Andrew. So actually, it's a mix of a lot of factors over here, because we are still throughout the pandemic. We're not post the pandemic phase, so we're still seeing the volatility of the markets, and specifically with the fossil fuel prices. And in my perspective, this will entail a lot of changes or directions by the government. It's out of question that all the governments understand the importance of cleaner energy and how this is beneficial for all the communities. However, with all of these government spending cuts and the difficulties that the economies are going through, will still the priority from the governments will go for a green energy agenda or not? Will still the regulator will be supporting for subsidizing or lifting the subsidies on the fossil fuel in favor of cleaner energies or not in the region? So I believe these questions, I haven't seen any government announcements except few as well that's supportive more on the SDG level, but none of them has really commented on how the energy mix will look like post-COVID-19. Perhaps it's a little bit early, as well as the markets are still absorbing the effect. It's still going on globally. There are countries even that has gone past the COVID, but however, not really open to the word, i.e. China, for example. US still struggling. So we're still seeing a lot of uncertainties around that. So I believe perhaps maybe H2 will clarify, hopefully, that we're not going to see a second wave, and the markets will tend to absorb what happened, and then we have more clarity around that. And the great factor will be, again, the government announcements to their commitment and enforcing that, and the regulator being abiding to the previous commitments and continuing the developing the incentive plans to encourage more of green energy investments.
Thank you, Hanan. Anand, what is your view going forward of renewables? If you had to sum it, what do you think will be the key challenges in terms of developing? Is it liquidity? Is it subsidies? What do you think would be the main challenge?
In my mind, liquidity, both from a debt and an equity perspective, is not a constraint to any part of the world today. For a well-structured project, there is adequate capital available for every country on earth. I guess what will drive the near future is the government and the state utilities focus on pushing renewable energy forward. There are a lot of governments who are still struggling to ring-fence the economic impact of the COVID-19 situation. And hence their priorities could be different from just looking at clean energy at this stage. And as Amit has said, there are governments like India which are doing both together, or have the ability to do both, contain economic crisis as well as push clean energy in parallel. So I would say it will be government and state utilities as a key driver to clean energy projects in short to medium term.
Great. Thank you, Anand. What do you think will be the key challenge and hurdle to reaching renewable energy targets? Bit of a delay there, Amit. You want to sum up what you think will be the key challenge?
Yes.
Closing remarks.
Sorry about that, Andrew. So I would put policy and regulatory thing at the top, where we see a lot of vision and clarity from the government should come, which could take care of the investor concerns. And I think the innovative bankable structures driven by the guarantees should be the way to go if we need to continue to install major renewable energy installations in coming years. Thanks, Andrew.
Great, thanks, Amit. So I think that's a good time to wrap up. I'd like to thank all our panelists today. It's been very interesting hearing about the opportunities and challenges for governments across the world, particularly in the Middle East and India regions. We've heard about innovation in financing for clean energy projects. We heard about the importance of regulation. We've heard about appetite from the private sector for investing in clean energy schemes. We've heard about the opportunities for manufacturing, which is a key part about energy diversification, is how you can ensure that your industries will benefit as well, and your economies. I think that the point was made by Amit earlier that a key priority with what's happening with the pandemic is creating jobs for people. So if you can create those jobs either in renewable energy or in an industry that's sustainable, that will ensure that carbon emission targets can be reached and also economies can start to flourish post-pandemic. I'd like to thank our panellists today, Baka from HSBC, Amit Brohatsky from Synergy Consulting, and Jürg Gabler from the German Agency for International Cooperation. Thank you all. Thank you everybody for attending and for your questions. I hope you're enjoying the digital week. Please don't forget to make use of the networking tool, GRIP, so you can connect with your peers across the world. And we look forward to joining you soon for the next broadcast this afternoon or tomorrow. Thank you very much.
Thank you so much. Thank you.